Welcome to this special podcast, sponsored by Murphy Business Sales Edison, New Jersey office, where your business aspirations meet expert guidance. Whether you're looking to sell your business or explore new acquisition opportunities, we are here to support you every step of the way. Join us as our hosts deep dive into small business topics which are relevant for buyers, sellers, and other transaction advisors in the ecosystem.
Welcome to the Deep Dive. Today we're jumping right into the small business market as it looked in early 2025.
That's right.
And despite, some economic uncertainty hanging around, the resilience is actually quite striking.
It really is. Our main guide here is the BizBuySell Insight Report for Q1 2025. That's BizBuySell.
Right. The BizBuySell report, it really tracks the pulse of business for sale transactions and sentiment in the U.S.
Yeah, and it's pretty comprehensive. For Q1, it logged 2,368 closed deals.
Wow, okay.
Yeah, with a total enterprise value, basically the total worth of just over $2 billion. Gives you a solid picture.
And the feeling at the very start of 2025?
Yep.
It was quite optimistic, wasn't it?
It absolutely was. The report points to this initial burst of energy. People were hoping for, lower taxes, maybe interest rates coming down, fewer regulations.
Mm-hmm.
Charles Padawan over at Gatsby Advisors Brokerage even said Q1 definitely picked up speed compared to Q4 of last year. More energized, he called it.
But then things shifted a bit.
They did. Just as things were looking up, the new administration started talking about potential new tariffs. And that's really the core of our deep dive today. We want to unpack the immediate effects of these tariff promises on the small business market, using this Q1 BizBuySell data as our guide.
Got it. So these tariff announcements, how are they actually affecting buyers and sellers right now?
Well, the report makes it clear it's creating uncertainty for both sides.
Right.
It's not like deals have ground to a halt, but it's definitely changing the approach. Kinsey Jones from Sunbelt Business Advisors mentioned buyers are digging much deeper into the financials now.
Makes sense.
Yeah, and sellers in industries that might get hit by tariffs, they could be looking at lower offers. Maybe their business sits on the market longer while buyers try to figure out that future risk.
But it sounds like strong businesses are still moving.
Oh, absolutely.
Yeah.
That's a key takeaway. Buyers are still very much interested in fundamentally sound businesses, and they're willing to pay for quality.
So demand is still there.
Definitely. In fact, the median sale price actually ticked up by 4% compared to Q1 last year. So despite the tariff shadow, underlying strength is visible.
That's interesting. Quality still commands a premium. And this leads us to something Vipin Singh from Murphy Business Sales Edison office said, which really stood out.
Oh, yeah. What was that?
He pointed out that buyers may find good opportunities when a business has pricing power.
Pricing power, key.
And can easily pass on the impact of tariffs to the end consumer, especially if the product is non-discretionary.
That's a fantastic point. It really zeroes in on a crucial element right now.
Right.
Can the business absorb cost hikes or pass them on?
Exactly. And the survey data in the report kind of backs this up, doesn't it?
It does. 37% of owners said tariffs increase their costs.
Okay.
And of that group, 57%, a clear majority, are passing those costs along to customers.
But passing on costs can be tricky, can it? It might hurt sales.
Well, yes, that's the balancing act. The report found 46% of those who raised prices also saw sales decrease. And 26% of owners affected by tariffs reported lower profitability overall. So yeah, it's not a simple fix.
Costs go up, prices go up, maybe demand goes down. It's a chain reaction.
Precisely. Ruben Valderas from Adograph Corp mentioned this higher raw material costs mean a more expensive final product. He thinks the market might adjust over time, but it adds that layer of unpredictability.
And it sounds like a lot of people are still in a wait-and-see mode.
Very much so. 34% of the survey respondents felt it was just too early to tell what the full impact will be.
Right.
It's that unknown that's causing the caution. Ryan Himmert at Washington Business Brokers put it well. The uncertainty is far worse than the actual impact.
Yeah.
Owners are adaptable, but they need clarity so they can adapt.
That clarity piece is huge. But even with all this uncertainty, buyers haven't just vanished, have they?
Not at all. The report says 60% of buyers are still actively looking.
Still looking, yeah.
And get this, 10% are actually accelerating their plans. They see potential opportunity in the uncertainty, especially for those really solid businesses.
So some are seeing this as a chance to maybe get a good deal on a strong company.
Seems that way. Demand for thriving businesses is high, more prospective buyers looking for quality. Hemmert also said buyers need to be ready, organized, responsive to act fast when they find the right one.
And who are these buyers? Is it just seasoned entrepreneurs?
Not entirely. There's this interesting trend the report calls corporate refugees.
Ah, yes. Tell me about that.
It's people leaving traditional corporate jobs. They're looking for the stability, the control that owning your own business can offer.
What's driving them?
Big motivators are financial independence, that's 77%. Then career control at 72%, work-life balance at 54%. And just escaping corporate politics, that's 44%.
I can see the appeal.
Yeah, the report gives examples, like Samuel Weru seeking financial freedom, or James Tubbs, an engineer wanting to apply his skills to improve an existing business.
So this influx of motivated people, maybe with different skill sets, could that actually inject some new energy despite the tariff concerns?
It certainly could. That desire for independence might fuel more entrepreneurship, bring fresh ideas into the mix. It's something to watch.
Okay, let's shift to specific sectors. Manufacturing really jumped out in this report, didn't it?
Oh, absolutely. The numbers were quite dramatic. Median sale price up 54%.
54%, wow.
Cash flow up 51%. Revenue up 64%. Huge increases.
Was the number of deals also up?
Only slightly, about 3%. But the deals that did close were for significantly larger, more valuable manufacturing businesses. And they took longer to close. Interestingly, median 265 days.
Any idea why such a surge in manufacturing values?
Well, the timing is interesting. It follows the previous administration's steel and aluminum tariffs, and there's anticipation around lumber policies. It suggests maybe a growing interest in reshoring.
What reshoring? Bringing manufacturing back onshore.
Exactly. Bring it back to the U.S. The pandemic definitely highlighted supply chain risks, and this could be part of that ongoing trend. The report even notes that having the capacity to offset the impact of tariffs on imported goods was a plus for some deals.
So domestic production is becoming more attractive.
Seems like it. John Zilla, a broker, shared an example of a trucking company. Their business increased because their main client, a manufacturer, started making more stuff domestically.
That really shows the ripple effect, doesn't it?
It does. And the report suggests maybe risk-tolerant entrepreneurs could look at import-dependent manufacturers as turnaround plays.
But that sounds like it requires careful planning.
Definitely. Proactive financing is key, and knowing about things like the SBA's Made in America Manufacturing Initiative.
Okay. What about other sectors? How did services fare?
Service sector saw a small 2% uptick in the number of transactions.
Okay, slight increase.
But the financial metrics softened a little. Median sale price and revenue dipped slightly.
Still demand there, though.
Yeah, especially for essential services, things like auto repair, healthcare, plumbing. Art Warsaw from Transworld mentioned buyers are looking for service businesses less likely to be hit hard by tariffs. Makes sense.
Right. And what about the sectors maybe more vulnerable to consumer spending shifts, like restaurants or retail?
They faced more headwinds. Restaurants saw deal volume drop 4%. Prices fell too. Retail was down 7% in transactions, with price and cash flow declines as well.
Tougher times there.
Generally, yes. Although even there, some see openings. James Williams, a buyer mentioned in the report, sees potential in buying and fixing up poorly run restaurants in good locations.
So even in challenge sectors, there are niche opportunities.
Always. You know where to look and what you're doing.
Now, one thing you mentioned earlier, seller financing. The report suggests it's becoming more important.
Hugely important, yeah.
Yeah.
62% of brokers called it very important. 54% of buyers, too.
Why the increased focus now?
Well, with the tariff uncertainty, maybe traditional bank lending gets a bit tighter for some deals. Seller financing can help bridge that gap. It's also crucial for securing SBA loans sometimes.
How does it benefit both sides?
For buyers, it can mean access to deals they might not otherwise get, or it can help offset maybe higher interest rates elsewhere.
Okay.
For sellers, it can mean getting the deal done, potentially getting a better overall price structured over time, maybe getting a decent return on that finance portion, and sometimes tax advantages.
Sounds like a win-win. But are sellers actually offering it?
That's the catch. The report notes only 19% of sellers plan to offer it. So there's a bit of a disconnect there, seller hesitation.
Interesting. So demand is high, but supply is low.
Seems to be the case. Which, as Max Fryer from Calder Capital said, makes seller financing uncertainty's friend.
Ha! I like that. Uncertainty's friend.
Yeah, in a wobbly market, it can be the thing that provides stability and gets the deal done.
So let's try to pull this all together. Based on this Q1 BizBuySell report, what's the overall vibe for the small business market in 2025?
It's nuanced. Definitely a mixed picture. There's cautious optimism, for sure.
Driven by what?
Buyer demand is still fundamentally strong, And you have the ongoing silver tsunami, all the baby boomers looking to retire and sell their businesses. That creates supply.
Right. Lots of businesses potentially coming onto the market.
Exactly. And buyers seem to be adapting to interest rates. 65% aren't delaying plans because of them.
But there are concerns too.
Oh, definitely. Worries about the broader economy are widespread. 60% of owners and buyers are concerned about a potential recession. Even 43% of brokers share that concern.
So opportunities alongside real risks.
That's the takeaway. Challenging times can often create the best opportunities, but you have to be prepared. Evan Meester advises buyers, do your homework thoroughly.
Good advice anytime, but especially now.
And Katrina Lofton suggests looking beyond the big banks, smaller, local banks might be good options for SBA financing.
Okay. And for sellers, what's the advice?
Max Fryer, again, he suggests if your business is stable or growing and it's in an industry that's relatively insulated from tariffs or AI disruption, now could actually be a prime time to sell.
Any specific sectors he mentioned?
Yeah, he called home services and commercial maintenance hot tickets right now.
Interesting. So preparedness and timing seem crucial for both buyers and sellers this year.
Absolutely. The key takeaway from this deep dive into the Q1 2025 BizBuySell report is really that the small business market is actively navigating these tariffs promises. It's complex.
Yeah, it creates both challenges and, it seems, some pretty significant opportunities.
For those ready to adapt and who really understand what's shifting.
It certainly makes you think, doesn't it? How these big economic currents might affect your own plans, whether you're in the market or just observing.
Mm-hmm. And maybe that leads us to a final thought for you, our listener, to chew on.
Go for it.
Given this adaptability we're seeing from owners and this influx of motivated corporate refugees, what kind of new innovative business models or maybe unexpected market niches might pop up specifically because of these tariff-driven changes?
That's a great question. What new things might emerge from this period of change? Definitely something to keep an eye on as 2025 unfolds. Thanks for taking this deep dive with us.
Thank you from all of us at Murphy Business Sales for taking the time to learn about this important topic. We look forward to working together to achieve your business aspirations. For more information or a complimentary consultation for sell-side services, visit us at murphybusiness.com/Edison and complete our Contact Us form.